Proper charity registration is essential for nonprofit organizations. Without it, your organization could face hefty fines, lose its charitable status, or even be barred from fundraising altogether. Understanding the complex web of registration requirements across different states is crucial for any nonprofit's legal compliance strategy. Most charitable organizations must register with their state's regulatory agency before soliciting donations. In New York, for example, organizations must register with the Attorney General's Charities Bureau if they hold property for charitable purposes, engage in charitable activities, or solicit contributions within the state. New York defines charity broadly, encompassing activities related to poverty, health, education, culture, and various community services. To register in New York, organizations must submit Form CHAR 410 along with several supporting documents. These include the Certificate of Incorporation, bylaws, previous year's financial report if the organization is over a year old, and any IRS tax exemption documentation. Organizations that solicit public contributions must also pay a $25 registration fee. Not all organizations need to register. Religious organizations and houses of worship are typically exempt, as are charities operated by religious organizations. Other exemptions include membership organizations that do not seek public contributions, parent-teacher associations, government agencies, and educational institutions. If you believe your organization qualifies for exemption, you can submit Schedule E, a request for exemption form. Some states offer additional exemptions based on fundraising thresholds. Organizations raising less than $25,000 annually and operating without compensated fundraisers may be exempt in many states. Volunteer-only organizations, or those that fundraise exclusively from members, might also qualify for exemptions in certain jurisdictions. However, even if you believe your organization is exempt, you often still need to file an exemption request with the relevant state authority. Once registered, organizations must maintain compliance through annual filings. In New York, registered charities must file Form CHAR 500 annually, along with applicable IRS forms such as the 990-990-EZ or 990-PF and relevant schedules. Depending on the organization's size, an independent audit report from a certified public accountant may also be required. Annual filing fees apply as well. Organizations must also notify regulatory agencies of material changes such as changes in name, address, leadership, governing documents, or charitable purpose. Failing to update registration information can result in penalties or revocation of registration privileges. One of the most challenging aspects of charity compliance is navigating multi-state fundraising requirements. Charitable solicitation is regulated at the state level, with over 40 states requiring registration before soliciting funds from their residents. This means if your organization fundraises nationwide or online, you may need to register in multiple states. The requirements vary significantly from state to state. Some states participate in the multi-state registration and filing portal, which allows nonprofits to file registrations and renewals in multiple jurisdictions through one system. A few states, such as Texas and Indiana, generally do not require registration for charitable solicitation unless specific thresholds or activities apply. The method of solicitation rarely matters from a regulatory perspective. Whether you fundraise through a website, email, social media, phone calls, text messages, postal mail, or in-person requests, most states regulate the activity if it constitutes solicitation. This means even passive online donation capabilities, like a donate button on your website, may trigger registration requirements in states where donors reside. Working with fundraising professionals adds another layer of compliance. Many states require both the charity and professional fundraisers to register independently. Written contracts between the charity and outside fundraising entities must often be filed with the state. Fundraisers must typically disclose their role and whether contributions are tax deductible. Commercial co-ventures where a business advertises that proceeds will benefit a charity usually require disclosure to the state and reporting on funds raised and dispersed. For example, if a company advertises that 10% of proceeds go to a specific foundation, This arrangement typically needs to be registered. The consequences of non-compliance can be severe. Organizations may face fines, be ordered to cease fundraising activities, and risk damage to their credibility and legal standing. In some cases, board members may even be held personally liable for compliance failures. Given the complexity of charity registration requirements, many organizations seek legal guidance to ensure compliance. While not mandatory, working with an attorney experienced in nonprofit law can streamline the registration process and help navigate the patchwork of state and federal regulations. Understanding charity registration requirements and fundraising compliance is essential for maintaining your organization's nonprofit status and avoiding penalties. By properly registering, filing annual reports, and staying informed about multi-state solicitation requirements, your charitable organization can focus on its mission while remaining in good standing with regulatory authorities.